Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, glad to be back.
John, FPX Nickel published its updated PEA this week. Is Elon Musk going to beat a path to its door?
He should, but he won't. Some weeks ago, the mining industry, at least companies involved in the nickel space, got quite excited when during one of his quarterly conference call, he made the following statement. I'd just like to reemphasize any mining companies out there, please mine more nickel. Wherever you are in the world, please mine more nickel and go for efficiency, obviously environmentally friendly nickel mining at high volume. Tesla will give you a giant contract for a long period of time if you mine nickel efficiently and in an environmentally sensitive way. Now, what FPX Nickel has just put out kind of fits exactly what he is asking for, which is a supply of nickel that can be certified as clean. And he has a really big problem right now because, Tesla tries to sell itself as a clean company. Electric vehicle, we don't hurt the environment, we meet all the ESG standards. But nickel is a very problematic metal. The nickel sulfides come from mines like Norilsk, those in Sudbury, and they end up being sent as concentrates to smelters around the world. In the case of Vale, they have their own smelters at Sudbury. But smelters are not exactly an environmentally pleasant thing. So any nickel that comes from a smelter is going to be tainted in some way. The other type of nickel is what comes from the laterite ores, and those have to be processed with high-pressure acid leaching in places like Indonesia, Australia, Madagascar, the Philippines, New Caledonia. But with that flow sheet, they can actually make a refined nickel product directly. And that also ends up in the LME warehouses. And when people want nickel to make stainless steel or whatever, they just purchase it from the LME warehouse and nobody knows where exactly it came from. Now, Elon Musk's Tesla needs two types of nickel. It needs stainless steel quality nickel to make the various parts that go into the electric vehicle, but he also needs nickel sulfate, which is a higher quality form of nickel for the lithium-ion battery. And the expectation is that by 2025 to 30, demand for electric vehicles is going to go through the roof, and that the current system is not really equipped to set up to handle the demand growth. But it is absolutely not equipped to facilitate demand growth for ESG nickel. But what the FPX Nickel is proposing to do at Dakar would completely match all these types of ESG standards. And that is because their nickel deposit, which is 1.5 billion tons, and probably twice that by the time they finish exploring other surface showings that they have on that project, it's a type of natural stainless steel called a wareroite. There are no sulfides in the system, so you have no acid drainage problems. It's one giant location. The tailings are fairly finely ground. They have a lot of magnesium in it, and magnesium itself is a natural carbon sequestration mechanism, so the tailings pile itself can take CO2 out of the atmosphere and pack it away for good. The location in British Columbia would mean that your power comes from hydroelectricity, which has a zero carbon footprint. So this mine has the potential to be carbon neutral. And the beauty of the product is it does not have to go to a smelter. The 63% concentrate that they are going to produce, the stainless steel mills can feed it directly into their mills to make stainless steel. And one of the interesting things that came out in this updated PEA is that FPX Nickel thinks it will get 98% of the LME nickel price for the contained nickel in that concentrate. And that's a huge improvement for what Cliffs thought it would get from the 13% concentrate in the PEA that they did in 2013. And that was only 75%. Now, when Elon Musk talks about, we'll give you a big contract, well, he's not going to take the whole nickel market. The whole nickel market's about $40 billion. And although the Dakar project is very large, would produce about 100 million pounds of nickel, that's still less than 1% of global supply. And the nickel market has diverse suppliers. It's not one of these metals where there's a single or a handful of dominant suppliers. Anybody new who comes along has a problem muscling into that market. Say something like niobium, where 85% of it comes from one giant mine in Brazil. So the way the future would unfold is that if this thing goes into production, then they would just sell it at 98% of the LME market price. If Elon Musk wanted certified clean nickel, then he would have to pay a premium. But that hasn't really crossed his attention. He's looking at getting a discount from the LME price as if there's something special, plus to have an ESG credit. So we haven't yet seen any action go behind all these words of these people talking about, we want to secure our future supply and we want it to be done according to ESG standards. And by the way, we want to pay you less than what you would get just selling it along with the very dirty nickel supplied by Norilsk and some of these other operations in the world. Now, getting to the PEA itself, it came in with a $1.7 billion capex, and the NPV at the numbers they chose is similar, so that's good. The IRR came in at 18 point something %, and that's not the 20% that they want to see, but it is high enough for such a long-lived 35-year mine. And the all-in sustaining cost for nickel came in at about $3.14. So those were good numbers. The company only has 179 million shares fully diluted. And if you assume that they were able to raise the next 50 million needed to take it all the way to feasibility and mine permit, which would take about five years, this thing would have a value of somewhere between, depending on what price they dilute, between $5 and $10 at that $7.75 nickel price they used. Now, there was some concern, well, nickel price is $6.75 a pound right now. Why are they using $7.75? And this is where you get into the arcane world of forecasting. And they took 6 different analysts' projections for long-term nickel prices and averaged it, and that's the number they came up with. And these analysts, they look at the supply-demand projections, which mines are coming on stream, which mines are coming off stream. They try to link it to the macroeconomic growth, try to match in new innovation demand growth, such as from the electric vehicle market. And of course, all this means that at the end of the day, the numbers are always going to be very different from what they predicted. But the fact that even if you drop it back to 20%, to say 620, this thing still has a $750 million NPV and a positive IRR. Anybody looking at this is going to look at it from a strategic long-term perspective. And one of the big things they announced in January this year, which should also be of interest to Elon Musk, is that initial testing shows that they can make a nickel sulfate directly from this concentrate. And right now, nickel sulfate is either made from reprocessed LME nickel, or one of these big HPAL operations, they can add another segment to their flow sheet, and the nickel that they get, which is a refined nickel that doesn't have to go to a smelter, they can convert that to nickel sulfate. And that, in fact, is what Robert Friedland's Sunrise project in New South Wales of Australia proposes to do. And that's the sort of project that Elon Musk should also be looking at, because this has the potential to produce cobalt, and it would produce scandium as a byproduct. And he's just made a big deal about how he's going to have everything all made with these aluminum casting machines in Germany. The big push for lightweighting is aluminum. Scandium is an aluminum enhancer. But do we see Elon Musk going to Robert Friedland and saying, gee, I like that Sunrise project. Yeah, it's going to cost way more than $1 billion to develop. But guess what? At the nickel prices and cobalt prices we have today, this stuff isn't worth it. And I want to actually buy your nickel at a discount from what you want to sell it at or need to sell it at. So that's not going to fly anywhere. But this project here, some big producer is going to look and say, wow, if they can demonstrate further that this nickel sulfate can be cost effectively produced from the concentrate, and they can go through all the permitting and stuff like that, this type of project, that's a very valuable asset. And they're not going to pay a $1.7 billion NPV per share, which would be way off the scale in terms of price. It'll be a smaller percentage of that. So the company's challenge now is to raise the $10 million they estimate it will take to take the stock through pre-feasibility, which if everything goes properly, they would expect to be done in Q3 of 2022, which is a year and a half, or maybe almost 2 years from now. And then they would go into feasibility, and they estimate that would cost $10 to $15 million. In conjunction with that would be the permitting cycle, which would add another $10, $15 million. So we're talking a total cost of $40 to $50 million to bring this project to a permitted state where a construction decision can be made. So this updated PEA, it quantified the cost structure of all the changes that they incorporated, developed since they took the project back from Cliffs in 2015. And now the market can look at this and they can argue about what the right nickel price is going to be. But the cost discovery facts, that's now out there in the open. And this FPX Nickel, this is going to be a very interesting play because although the end users aren't yet interested, that Tesla, it's too early for Tesla, and the company's still too small for the big giant funds that are looking for ESG qualifying companies. There are smaller funds out there who will look at this and say, well, here we get two positive things. One, we get a lot of potential upside, but we also end up investing in something that hits all the ESG points. So a very positive development for FPX Nickel. And if Elon Musk is serious, at some point he'll come looking and say, I would certainly like to support the advancement of this so that I can be in line and have dibs at the minimum at the same price you would sell it into the general market. But I would like to have a certified clean flow of nickel for my product line so that I can protect my brand from allegations that I'm supporting Norilsk's very nasty nickel operation in Siberia's Arctic.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome back. We're speaking with John Kaiser. John, Scandium International had news today from New South Wales. Was it good for a change?
Jim, finally, good news for Scandium International from New South Wales. On January the 2nd or 3rd of 2019, the company greeted its shareholders with the news that the permitting department, which had granted a mining lease, signed off on it for the Ningen project, which would churn out 40 tons of scandium oxide a year, was in fact invalid because they had lost a farmer's letter claiming that that his land qualified for agricultural land status. And these surface rights cover the east pit, which might be mined until, 7-8 years from starting. All the infrastructure in the initial pit, it's on the western side where they already own the surface rights, bought from the same farmer for about $400,000 14 years ago. So this was clearly a shakedown effort, except it got bumbled along the way. The permitting department misfiled the letter. It was never processed. It was eventually discovered. And once they realized that they had not properly addressed that, well, the whole mine lease permit process was invalid and they had to cancel it. They issued a new one right away for the western part, but the damage was done. The stock tanked. Everybody's been in a foul mood about this. It dragged on for the longest time. They finally got a ruling that said, your land doesn't qualify for agricultural land because you haven't farmed it for a decade. And it was clear this guy knew this. These guys were going to develop a mine on this land and he would eventually sell it. But because they didn't make him an offer early enough, he decided to ramp up the cost and launch what basically amounts to as a shakedown. And if the agricultural land status does not hold, then there's an eminent domain process where down the road, Scandium International could buy the surface rights for whatever fair market value without any consideration that there's a very valuable mineral deposit underneath, which is actually owned by the state. So they signaled that they had made this ruling about several months ago, and then we had once again silence, and now they've made a definitive ruling. The farmer can still file a lawsuit, but he can only file it against the government. And Australia has this thing where the person who sues has to fund all their own legal costs, and if they lose, they have to fund all the winner's legal costs. And since this guy would be suing the government, and the government has very strong reasons to protect this decision, because if it were to lose it, there would be knock-on effects throughout New South Wales. It will spend a lot of money to defend the lawsuit. And Australia apparently also forbids having some lawyer fund all the legal costs in exchange for a percentage of the win, if there is such a win. So this story is pretty much over. The company will still need to buy the land at some point, but now they are able to reinstate the definitive feasibility study, which kind of was suspended because they're only going to mine the western part of the whole mining plan. What is the real value for this? They, of course, suggest that we could just mine our western part forever and ever unless scandium demand goes through the roof. But the numbers aren't there to support that. They would have to redo the whole definitive feasibility study. So the timing for this finally happening is good. There's no rush right now to develop a primary scale scandium mine. We have had this important development with Rio Tinto where their Sorel Tracy iron titanium processing facility, during the upgrading process, they learned how to recover scandium as a byproduct. I estimate that's maybe 50 tons per year, which is a very significant amount. It allows Rio Tinto to start building supply in a gradualist manner. Scandium International itself is negotiating with several copper producers, which likely includes Freeport McMoran, because it owns 6 copper oxide SX-EW operations in the United States, to set up a waste stream recovery process that would include scandium so that it can build its supply incrementally. This is a waiting game, negotiating. They're not saying much about it because they really don't want what the terms are that they're negotiating with these different parties to be in the public domain. But for a Rio Tinto that's sort of wondering, well, what if we are successful and get our 50 tons of scandium oxide going, and now we need a primary scalable supply? Where do we turn? Well, now Ningen is ready. All it needs is the $100 million to fund it, to get it going. So it makes Scandium International alive again. Cleantech Sunrise project, it's still stuck in the mode of, waiting for something special to happen for nickel and cobalt. And the company itself is behaving like some sort of strange case of Benjamin Buttons. It's now drilling deeper into the fresh underlying magmatic rock for platinum, which is, they've got a resource of about 1 million ounces of platinum there, but it's $10 rock, and it's in a strange mineral form called isoferric something or other. So the stock actually doubled with them reverting back to like a primitive grassroots type exploration play, as if everything that they've spent, a couple $100 million on in the past 4 or 5 years is worth nothing. And the Owendale project next door, well, it has its issues with water supply and also have to get the land, the surface rights. The other one, Australian Mines, it's not going anywhere with the Sconey project because that's even worse than the Sunrise Nickel Cobalt Scandium project. So Scandium International now is the only company with a shovel-ready, permitted, significant resource, and they are also pursuing their own gradualist way of growing the supply, make aluminum scandium master alloy. So it right now, in my view, is the primary scandium vehicle out there. It's good that this Ningen lease has been resolved. The government will re-grant the original lease in due course. And it was good news, finally. It should never have happened in the first place. But the chicken and egg problem of how do you get enough parties to commit to scandium offtake, nobody has been able to solve that problem. Not even Robert Friedland. But now there is this problem-solving strategy at play both through Rio Tinto's titanium slag upgrading process and through this copper oxide leaching recovery strategy that the company is pursuing. So things finally looking up for Scandium International again.
Closing comments from John Kaiser when Discovery Watch returns.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with John Kaiser. John, where's Golden Goliath with its effort to duplicate the Great Bear success?
Golden Goliath has now started a 40-hole, 6,000-meter drill program at the Kwai project in that Red Lake region south of where Great Bear has its LP gold play. Now, Great Bear has 5 rigs drilling away on a 5-kilometer segment of the 22-kilometer LP fault, and it's doing it on 50-meter centers. It's chasing it down to 500 meters. It believes that the disseminated mineralization is very similar to Hemlo. If they were to take this down to 1,000 meter depth, they would end up having a Hemlo scale system on their hands. You, of course, need to see all these holes gradually averaged out and turned into a resource estimate. But and Hemlo itself was like 22.6 million ounces, very extraordinary deposit, but similar style mineralization. And just to the south of it is the Packwash Lake Fault, which everybody's always known it was there, but it's overburden covered. It's never been drilled. And even the LP fault itself has not been drilled. The Dixie Limb portion in that area, that has been drilled, and that's where they had the Dixie Hinge discovery a couple of years ago that kicked off Great Bear's 15, 20 cents bottom dwelling status. It's now $18. with almost $1 billion market cap. And this 2004 lithoprobe study showed that the LP fault is a deep crustal fault that links down to the same apparent crustal fault system that feeds Red Lake. And interestingly, the Packwash fault and the Sydney Lake fault, which is a bit farther south, both of them also link into that same fault structure that is the LP fault. And the question is, clearly a lot of gold-pregnant fluids migrated up the LP fault, ended up in that whole structure which Great Bear is drilling off right now, but did any of it manage to get channeled off into the Packwash Lake fault? And until at the start of this year, this whole project that Paul Sabara took on for Golden Goliath, it was just a prayer and a hope because there was no geochemical evidence of any, importance indicating that there was gold in this thing. It could be just a barren fault that has little splays and shears running off it that have pyrite in it, but no gold. But during the sort of late winter, early spring geophysics program that they undertook to expand the one they'd done the year before, Bob Middleton said, let's try some basal till sampling, got his little mini backhoe in there. They succeeded in getting to a proper basal till, get samples. They even managed to get to bedrock and were able to verify, this is the sort of right rocks here in the bedrock that we would want to see associated with this Packwash fault. And then early July, they got back results from Stu Averill's overburden from the till samples, which showed that pristine gold grains were present in and around those samples near that Packwash fault. And that was the first evidence that this structure may have had gold-bearing fluids in it. And so Paul Sabara has managed to raise, $2.4 million through a summer financing at 15 cents common, 20 cents flow through. He now has $3 million in the treasury. The drilling started on the 8th or 9th of this month, a couple, right after Labor Day. They had some getting everything set up problems. He figures it'll be at least a week before they complete the first hole, and then it'll be another 3-4 weeks to get assay turnaround, assuming that some of these delays that we've seen with assay labs due to way too many companies raising money and being able to drill, plus the COVID protocols slowing everything down. The earliest I think we would get any results from this is probably mid-October. And the big hope, the big Discovery Watch hope, is that the Packwash fault, which the Kauai project straddles, is also fertile like Great Bear. The valuation is a fraction of Great Bear's. This is not the kind of system where you expect to see much visible gold. If you look hard enough, you might see a speck here or there, but it's not something that Paul Sabara is going to press release about, because you could have the bad luck that one little speck doesn't become part of the assay. But it will have disseminated sulfides. It'll have the alteration, all that sort of stuff. And Paul Sabara is going to have to make sure that the core shack has a high ceiling, because if Bob Middleton gets in there and starts looking at this core, he's going to end up with a concussion over the next 4 weeks if he sees the sort of stuff that he saw at Henlo and may have already indirectly seen or heard about at the Great Bear exploration program. So no visible gold to tip us off that this thing is fertile, but certainly potential that, the rocks all look great, but wait for assays. So this one's going to be one, stock's going to be all over the map as people wonder, do they have it, do they don't? And they'll be able to drill right to mid-December. If there are no problems, they'll have that 40-hole program done by then. And by January of next year, this thing will either be a very lame, discouraged play with nothing really interesting, or this thing will be blasting off, following in the wake of Great Bear, because the Packwash fault has been demonstrated to be similarly fertile as the LP fault was, which itself was ignored and nothing done with in all those decades since the whole Red Lake area took off. So why not down here where nobody had ever bothered, until Paul Sabara came along and said, let's take a look at this.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.